Well, traders are always concerned about how long they're holding on to a trade to make money or to limit their losses. Our guest is Rob Booker today to talk about that subject. Rob, thanks for being here.
Hi, Tim.
Well, when you get questions from traders about how long should they hold on to something, what are some of your answers?
A lot of traders ask me, should I hold a position over the weekend? And I have heard every answer under the book. I've been in presentations, seminars, webinars, read books, where every single educator or trader has a different opinion about that subject. And it comes down to the following. Typically, in the currency markets, we don't have gaps. We don't have earnings gaps or open gaps, or the market doesn't close during the week. We have gaps over the weekend. And traders are understandably concerned if they hold a position from Friday to Sunday afternoon, are they at risk of experiencing a large drawdown or a loss if they do so? And the answer is really, it depends on the strategy that you've tested, and it depends on sort of what has worked best for you in the past. If you're a long-term trader and you typically hold trades for weeks at a time, it doesn't really seem necessary or reasonable to close your trade over the weekend and then reopen it, because you might benefit just as much as you would not benefit from a move over the weekend. On the other hand, if you're a short-term trader and you don't really have, you don't necessarily or usually experience large swings before you're able to close trades, and you have tight stop losses, well, that's probably not a really great idea to hold your trades over the weekend. So it really is different for both types of traders. And most of all, it's not 2008 anymore. We don't have investment banks, at least in the United States, failing on every weekend and causing enormous gaps in the currency market over the weekend, 500, 400, 300-point gaps. So we're not really in that same period of time that was completely unusual and a statistical aberration. So really it's not the same danger as maybe it might have been 2 or 3 years ago.
Now, with the Bank of Japan doing intervention on their currency with quantitative easing, maybe coming in from the Fed on our end, does that change your answer at all?
Boy, I could talk all day long about intervention, and intervention does sort of automatically start a discussion about when is it dangerous to hold a position in the dollar yen? Can traders really get caught off guard? And the answer is traders should go back to that period of time in the mid-2000s, early 2000s, when the Bank of Japan was heavily intervening. They should go back through that data and they should test the systems that they use, whether short-term or long-term. And they should make sure that they're ready for those swings, because no matter how much speculation that we each have about when that intervention's coming, nobody really knows when it's going to happen. And when it does, you have to sort of either get out of the way or you've got a system that can cope with that.
Rob, thanks for your time.
Thanks, Tim.